Hi everyone, welcome back to Market Update featuring by Market Soul and Rationale. Now the focus has shifted from inflation to economic activity side. So this policy shift actually has been going on like for a while, but like especially after the latest non-farm data that came pretty lower than the expected, but with the Jackson Hole meetings after the Powell speech, it's apparent that the main focus of Fed members also has shifted from inflation side to labor side. But the question is, are we gonna get like soft landing or hard landing? That's the issue. That's the way that I'm trying to evaluate current market situation. The main picture is mainly based on if like the policy has shifted, but how the market participants are going to act according to upcoming data, because currently the mood is like good data, good pricing as the main focus became the economic activity side. Currently data doesn't show any like a significant issues with the economic activity. It seems good, but like the next non-farm payroll data will play a very crucial role on this side. And as we see, like as the market participants converge to the soft landing side, we might expect that the risk on sentiment will be around. But in the like opposite situation, if the non-farm payroll data comes like very below than expectation, like very like catastrophic data or something, or if we receive that like PMI number is not going well. For example, on Monday this week, we received very good like core durable good orders. That means like still there's demand in the economy for the good like durable goods and stuff. That's a good sign actually. But as we receive like this kind of like as we receive mild data, let's say, like the main scenario of the market, which is soft landing, will be will be on the let's say main focus. But if we see like a very like a catastrophic data or bad economic activity signs, that will be a hard landing scenario will get in play. And in that scenario, the market might expect Fed to cut rates so fast, because the main focus actually after Jackson Hole meeting, as Powell mentioned, that the direction of the direction of the rates is pretty clear right now. In September we're going to receive 25 basis points, that's certain, but the pace is still unknown. And if data comes if data comes very bad than the expected, very low than if data shows really bad economic activity, that means markets might get it like, okay, Fed needs to cut rates very fast than expected. And in that situation, it might result in some panic, because that in that scenario, market would think that, okay, the job is not under control. That's why Fed is acting so fast. So what I'm trying to say here is, generally the mentality is, okay, if rates comes down, risk on is there, like a long duration assets, cryptos, growth equities will perform really well and stuff. But actually it's not the case. So the pace is so important, the amount is so important. That's why we in order to see some a risk on environment, we need to see some balanced rate cuts during this rate cut path. So okay, with the Jackson Hole meeting and stuff, we can say that Fed policy members shifted their focus there. And in today's video, I'll try to show directly through some charts some major charts. If the market perceiving this current situation as a soft landing or hard landing, what might be the potential implication of soft landing for each instrument? That's what I'll try to explain in today's video, and it will be on mainly like a major charts, major FX charts, crypto, and equity indices. And yeah, let me just switch to my charts, and let's start with dollar index again. So yeah, if you are able to follow our videos, like especially in dollar index and Euro USD chart, I was mentioning this symmetrical triangle a lot. And currently this movement, this breakdown, shows that market still gets, like, as a base scenario is soft landing, because as we see, like because in the soft landing scenario, what we expect dollar index to come down, equities like long duration assets, cryptos to goes up, in yields to come down, and if yields to come down with the lowering inflation expectation, also real rates to come down, and real rates to open room to go. That's the base scenario, right? And as you can see, I'm still following this chart. Let me go through in Euro USD to examine this mentality. It's actually the same. So first of all, as you can see here, there's a small head and shoulder bottom chart pattern formed, and it's broken down, and the potential target is 1.13 here. Here, when I write like the symmetrical triangle chart pattern price target, that doesn't mean that I expect it to go there. It's just like technically what this symmetrical triangle chart pattern shows as a price target. That's all. That it doesn't give like any indication of, okay, just wait until here. But yeah, this was the trade idea that we had given. Currently it's around 1.11, and the as a prior high, 1.1140 levels here would be the first resistance, and I think the price already passed that level, and I'll be watching this 1.13 level. Actually, it acted faster than I expected, but yeah, like after actually, especially after Jackson Hole, and before that, the general tendency of market to shift their focus from inflation to economic activity, plus the soft landing scenario becoming the base scenario, made Euro USD to move faster than expected. And for the pound USD also, it was the same situation. Here, that's what I'm following, but yeah, I would expect that like 1.31 level to act as a resistance, but still we're there. I'm watching here, and we might see some rejection from this area, and that will be normal, by the way. And yeah, like probably like that, in order to see some healthy price action, we might expect it to consolidate around here, maybe forming a cup with handle. But I'll be updating you about this chart also. I'll be watching like this if I see any potential trade idea. But that was like that. I mean, that was one of the trade ideas that I had provided in this video series, and also in the rationale newsletters. The breakout, pullback, and continuation of the price action. So USDN in general, what happened to USDN? So USDN was prone to carry trade actually, because the rates were so low. So market participants were borrowing cheap from as a yen from Japan and investing in foreign countries as government bonds, as equities and stuff. So currently, as this chart depreciates, that means yen gains its value back, because like the carry opportunity is like vanishing, because like because in this carry trade mentality has some costs in order to hedge your investment for the FX risk, because when you get loan in yen, and when you invest in USD, you have USD yen forex, like currency pair risk. In order to hedge this, generally investors go and hedge themselves with options or some swaps and stuff, with Japanese yen increasing rates, increasing yen rates. This opportunity, this room to get profitable quote for those options or FX swap is gone right now, as actually it's on the path of going. That's why it's not that much attractive as it was currently, and that's why we see this movement. But yeah, still, when you let me show you, I had showed this before, I guess, but let me emphasize again. This is the monthly chart of USDN. It's coming down, but you know, in the monthly chart, as you can see here, there's a really clear head and shoulder bottom chart pattern. Breakout, pullback, continuation. It's coming back, but yeah, still I think it's not but when you look monthly, that was the bottom actually. So yeah, it's pretty normal movement technically in a scenario of breakout like this in a monthly chart. Yeah. Okay, let's switch to gold. As you might all follow, because gold has become the main focus of the market lately, because also in the monthly chart, as you can see, huge breakout. This bar, the March 2024 bar, is pretty clear breakout, no doubt. Nice head and shoulder continuation chart pattern here, and after the breakout, the price action continues. When you come to weekly, it's still same situation. And yeah, in the soft landing scenario, we would expect the rate to come down with the real pushing the real rates down, and we expect it to provide room for gold. And I'm still optimistic about gold. Any kind of correction should be used as a buying opportunity. And if you ask a price target, in general, this head and shoulder continuation signalize 2,600 levels, 650 levels, 670 levels. And unlike EURUSD one, because that price target was, I think, not that it's in at least in the short term, it's not that possible to see. But in the gold in gold, it's pretty feasible though. And yeah, that will be the price target that I'll be following in the upcoming days. Silver actually, generally when we see precious metal rally, we're generally used to see they act together, right? When we say okay, it's pretty clear, pretty healthy precious metals rally when both gold and silver acts together. But in the current situation, first of all, silver's function of being used in manufacturing as a commodity is another feature of silver, apart from being a precious metal. So probably in a world especially where China is struggling, the economic activity is under pressure, that's the main reason for me to silver not acting as fast as gold. But the thing is, we can say that with this mentality, silver has much more room than gold if it managed to act. And technically, I'm following it with this head and shoulder continuation chart pattern. It's less clear than the gold one, but yeah. And another way to, sorry, yeah. And in the daily chart, when you come to daily chart, it's better, it's easier to show like in the weekly, I guess. Yeah, this pullback is pretty normal, and as you can see, like this chart, the 5th of August, like that week, as you can see, the price got rejected, like the pullback got rejected from 40-week moving average, this red line, plus this old resistance, current support. So that means that this area is 26 levels, or let's say 26, 27 range is pretty valid, right? And after this, as you can see, there's a bullish engulfing, and it's like this part is pretty nice. And as we see less concerning issues with the global economic activity, I expect silver to catch up with the gold, and maybe outperform the gold. But I'll be following 30 levels for silver. But after gold, like generally, I like precious metals in the current environment, because I don't see any reason to sell, because we have like a like a lot of ongoing issues with geopolitically, and also high tensions going on Middle East, Ukraine, Russia. That supports precious metal, first of all. Second, disinflation. With the disinflation path, I'm not saying like disinflation means good, like a positive precious metals, but I'm saying that with yields to come down, with real rates to come down, that would open room for precious metals. That's the second side. And apart from that, in general, like it's more macro way of looking. This is highly debatable actually, but the thing is, generally in an inflationist environment, they expect the gold to catch up, like gold to let's say compensate it, but it's much more macro level. It's not like a short-term level, and it's still I'm doubtful on this idea. But just as another angle that I'm trying to explain, that would also provide some like, okay, we're in the like disinflation path right now, but in general, with the global activity is always expanding, we're in a world with it keeps inflationing. So yeah, in general, like, but with the main thing is real rates to come down and geopolitical risks, that's more than enough, I think, to justify precious metals. And for the oil, so as you can see, this increase here, let me show you like this. This moves. I mean, we're all like all sourced by some supply activity came from OPEC plus. Apart from that, with again, it's not the same, like, but yeah, as I mentioned in the silver chart, since the economic activity is struggling right now, I don't see any bullish scenario for oil. That's why I'm following this head and shoulder top chart chart pattern here. Sorry, as you can see, it's like not the proper one, but yeah. And on the right shoulder, as you can see, there's a symmetrical triangle, and I had mentioned this potential trade idea. So my view on oil is I would be trading only short right now. I wouldn't benefit any like a long scenario. I wouldn't buy this dip because like I don't see any macro level support point for it. And yeah, that's how I'm following. And if I see any like a breakdown, I will be updating through my Twitter account, or through, like, if you follow Rationale newsletter, I'm posting some FX futures reports also. You can catch up through there. And about indices, yeah. Like, so when we come to weekly, like, pretty clear uptrend, we're here, and technically, as you can see, we might see a cup fit endle chart pattern maybe to form, but in general, it's good to see, like, after this, like, this movement, all you recall, like, carry trade activity, Japan carry trade activity ended, and this was the result of it. But as you can see, like, from this levels, we saw huge rejection. I mean, we, like, the market compensate or whatever he gave in this correction, and here currently the price is consolidating. It's pretty same situation, sort of same situation for Nasdaq as well. But here, what I try to emphasize with the indices is, generally, in the soft landing scenario, we would expect some, like, in a risk on sentiment, some growth stocks, some, let's say, long duration AI kind of stock, technology stocks, to perform better than some value stock like a finance stock, consumer staple stock, which are like some equities, some stocks in the sector of, like, more like necessary goods and services, right? Like, for example, I don't know, foods and services. Because what's the mentality? If there's a risk-off scenario, people will be buying all, like, foods and stuff, medicine, healthcare, right? It doesn't matter if the economy is doing well or bad, like. But in a environment that risk on, the liquidity is like there's an ample liquidity. In that scenario, we would expect some technology stocks, growth stocks, or I don't know, like let's say the consumer discretionary luxury stocks to perform better. So in the case of that's the way I'll be monitoring if the market perceiving the current situation as a soft landing or hard landing. If I see that healthcare or consumer staples outperforming technology or, like, consumer discretionary luxury goods and services kind of stocks, then I'll say, okay, hard landing might be getting the, like, wheel and stuff, that will be the mentality. So accordingly, let me show you a ratio of consumer staples to consumer discretionary, like the necessary goods and services over luxury goods and services, just to make it simple. So in the weekly chart, as you can see, that's my here is like it's not a proper one, but there is a nice consolidation at the bottom here, and as you can see, this ratio has some room to go up. If we see further increase in this part, I might say that, okay, let's be cautious about hard landing scenario, because the market's perception is shifting to that way. Yeah, and as you can see, this is healthcare. Like, I think it was last week's Rationale Equities report. There was like a 10 new trade ideas and I think 5 or 6 of them were healthcare in technically, and I'm just like screening technically at there. If technically it comes like that, that means healthcare is outperforming the market, and that makes me question the base scenario of the market, the soft landing scenario. I mean, the data doesn't support this idea of mine, but only like price that I see these kind of indicators. But I'll be very cautious about this, and I highly recommend to like follow mainly, especially with the mindset, with the narrative of soft landing and hard landing in the upcoming weeks or months or until the end of the year. And yeah, that's all I'm gonna cover for this week. I hope you like the video. If you enjoy what you see, if you learn anything in these videos, please give us a thumbs up, and please subscribe or share if any of your friends are interested in such content. And I hope you a really good week. Bye.